Greetings, everybody. Welcome to Liberty Call. It is Wednesday, October 12th, 2022. Hope everybody's having a great day out there. Apologize for missing out on yesterday's video between appointments and the baseball game. Kind of an exciting ending there. Uh, just didn't get a chance to broadcast a video. But anyways, if it's your first time watching, please give me a big old like, share, subscribe. I would greatly appreciate it. And today we're going to go over to the markets and today's market recap, some Fed minutes news, and the producer prices information came out. So let's go ahead and jump in. So the Dow Jones finished the day slightly down 0.1% at 29,210. The S&P 500 was down 0.34, closed at 3576. NASDAQ was flat at down 0.09, closed at 10,417. Small caps were down a little more than 0.25%. The VIX was up 0.27% today. It's currently sitting at 33.72. Moving over to Canada, they were flat at down 0.06. Brazil down 0.96. Mexico down 0.18. Jumping across to Europe, Germany down 0.39. The UK down 0.86. France down 0.25%. The Euro stocks down 0.26. The Netherlands were down 0.81, Spain down 1.29, Italy down 1.27, Switzerland flat at down 0.08, and Portugal down 1.86. The Russian markets were split. The MOEX was up 0.11, while the RTSI was down 1.05%. Moving over to the Asian markets, they were kind of mixed overnight. Japan was flat at down 0.02. Australia flat at up 0.04. New Zealand down 1.06. Headed over to China, Shanghai was up 1.53. The SESE component up 2.46. The China A50 up 0.59. The DJ Shanghai up 1.6, and the Hang Seng was down 0.78. Taiwan weighted came in down 0.19. So that's how the markets did today. So kind of a mixed day, mostly red in Europe and then here in the U.S. All right, well, let's go ahead and read through today's market recap. Wall Street stocks rise while dollar loses ground after Fed minutes. Wall Street's equity indexes edged higher in volatile trading on Wednesday, while the dollar lost a little ground as investors digested minutes from the latest Federal Reserve meeting and waited for U.S. inflation data due on Thursday. The dollar paired gains after climbing to a fresh 24-year peak versus the yen, holding above levels that prompted intervention by Japan last month. Sterling gained ground regained ground after a sharp fall in the previous day as investors eyed the Bank of England's next steps. Wall Street gained some ground after minutes of the September 20th and 21st meeting showed many Fed officials, quote, emphasize the cost of taking too little action to bring down inflation likely outweighed the cost of taking too much action, end quote. Let's see here. Quote, for the most part, there's nothing too earth-shattering in the Fed minutes. The fact that they're saying that there is more risk doing too little than doing too much maybe reinforces the idea that they're more likely to continue to raise rates at a quick pace, end quote, said Chris Zaccarelli, Chief Investment Officer at Independent Advisor Alliance. But he cited discussions of calibrating the response, suggesting awareness of the risk of hiking rates too fast. Quote, they've been talking about how they're willing to risk a recession in order to bring inflation back under control, but it's possible that the recession risk increase, they may lose their nerve a little bit, said Zaccarelli. Let's see here. We already talked about the Dow. The Pan-European Stocks 600 index lost 0.53%, and the MSCI's gauge of stocks across the globe gained 0.04%. Global equity markets have been volatile due to heightened fears about an economic slowdown and the impact of aggressive rate hikes by the central banks. On Tuesday, Wall Street stocks had switched from green to red after BOE Governor Andrew Bailey said pension funds hit by a spike in UK gilt yields had just 3 days to fix the problem before the BOE ends its emergency bond buying scheme. The BOE also signaled private lenders that it's prepared to extend support beyond Friday's deadline if necessary, the Financial Times reported. Wednesday's U.S. inflation reading, the producer price index, did not alter expectations for the Fed's November rate hike. Still, investors were laser focused on Thursday's CPI. Quote, the market is looking ahead to the CPI release tomorrow, said Zaccarelli, with some bulls hoping that if inflation slows, it will give the Fed reason to slow down or pause, which I don't think that's going to happen. In currency, sterling last traded at $1.10, up 1.19% on the day after going as low as $1.0925 earlier. The euro was down 0.06 to 0.9697, while the Japanese yen weakened 0.66% versus the greenback at 146.82 per dollar. In treasuries, the recent sell-off eased a bit. Benchmark 10-year notes were down 4.3 basis points to 3.896% from 3.939 late on Tuesday. Oil futures fell for a third straight day as a stronger dollar and worries about weaker demand and rising interest rates outweighed supply concerns after last week's OPEC Plus cut its production target. U.S. crude futures settled down 2.3% at 87.27 a barrel, and Brent was at 92.78, down 1.6% on the day. Gold eked out gains on Wednesday after 5 sessions of losses, although an uptick in the dollar kept prices in check as investors waited for the Fed minutes. Spot gold added 0.5% to 1673.79 cents an ounce. U.S. gold futures fell 0.54% to 1670 an ounce. So, and we've talked about this before. As the dollar strengthens, that makes commodities, reverse in price. So same thing, for like gold, silver, oil. If the dollar strengthens, usually the price of those commodities will come down. When the dollar weakens, you'll see the price of those said commodities head the opposite direction. They just have that inverse relationship. And my beard just does not want to cooperate. It's sticking out sideways all day today. So, all right. Let's move on over to some information about the Fed minutes. Fed officials worried about ending inflation battle prematurely, minutes showed. So I'm just going to highlight a couple sections here that we hadn't already talked about. So since the meeting, policymakers have been united in their comments that they see an urgent need to address inflation, which they fear risks becoming embedded, even if their aggressive policy tightening comes at a cost of higher unemployment. Quote, underlined by the need to maintain a restrictive stance for as long as necessary, with a couple of these participants stressing the historical experience demonstrated at the danger of prematurely ending periods of tight monetary policy designed to bring down inflation, end quote. Policymaker projections released at last month's meeting showed that the Fed's target policy rate, currently in a range of 3% to 3.25%, its highest since 2008, rising to 4.25% to 4.5% range by the end of this year, and ending 2023 at 4.5% to 4.75%. So we still have a ways to go before we get interest rates up to what the Fed wants them to be at. Personally, I'd like to see that number a little bit higher to squash the inflation a little sooner than later, as opposed to this slow motion disaster that we've been going through. But from what they've been saying, they want to avoid a major recession. And but off topic of that, I did see an article. I did not include it in today's broadcast, but I believe it was Bank of America said that companies will probably start shedding jobs at 175,000 a month, either later this year or early next year. So that's a little worrisome there too. So, all right. Last up, services. Food boost U.S. producer prices. Some relief could be on the way. U.S. producer prices increased more than expected in September, but underlying goods prices posted their weakest reading in nearly 2.5 years as supply chains improve further, offering some hope in a battle against inflation. And let me stop there. In the meetings I've been having with clients of late, talking about the gross production numbers, and they look fantastic. It's what I kind of use as a proxy for the supply chain, and those numbers have been runaway excellent. So it's definitely one of the bright spots is to look at it, at the overall production of the economy. So You have to go to, I believe it's the Bureau of Economic Analysis to look up those stats. If anyone wants that information, reach out to me. I'd be happy to send you a link. The report from the Labor Department on Wednesday also suggested that producers could be struggling to pass on higher prices, with a measure of changes in margins received by wholesalers and retailers barely rising last month. Prices for intermediate goods and services also increased moderately. A 0.4% rise in price of services accounted for 2/3 of the increase in the PPI in September. Services climbed 0.3% in August. More than a quarter of the rise in September was driven by a 6.4% surge in hotel and motel accommodation prices. Prices for transportation and warehousing services slipped 0.2%, falling for a third straight month. Good news. And also benefiting from loosening of bottlenecks in supply chains. Margins for final demand trade services edged up only 0.1%. Goods prices increased 0.4% after declining 1.1% in August. A 1.2% jump in the price of food accounted for 60% of the increase in goods. Food prices were boosted by a 15.7% surge in the cost of fresh and dry vegetables. There were also increases in the prices of pork and chicken eggs. Energy prices rose 0.7%, driven by diesel fuel, residential natural gas, and home heating oil. It's getting colder. That kind of makes sense. But wholesale gasoline prices fell 2%, excluding food and energy. Goods prices were unchanged. This was the weakest reading for the so-called core goods since May of 2020 and followed a 0.2% gain in August. Core goods rose 7.5% in the 12 months through September, slowing from an 8.1% increase in August. All right, so that looks like all the details I was wanting to cover. So, it's kind of a good news, bad news, glass half full, half empty these days. That's kind of been my comments in meetings. It's like some things look pretty good. Some things look, not so great. Obviously, the inflation is the big bugaboo right now. So, my hope is that the Fed sticks with their guns and actually, continues to raise rates and, continues their quantitative tightening. Looking at the monetary supply, it does definitely look like that it has leveled off. We're not printing more money right now. I'd certainly like to see some deflation of the monetary base that would help push prices down for the long term. But what would the cost be? Potentially a more steep downturn in the equity markets, which I don't think anyone wants to deal with. And the Fed and our government's trying to do this balancing act. Plus, there's an election coming up in 4 weeks, so no one wants everything to fall apart right before the election, especially when they're trying to get reelected or voted into office. So, anyways, all right. Well, that's everything I had for today. I hope everyone has a fantastic evening. No Astros baseball tonight. The AL has Wednesday off. They play again tomorrow. But there is definitely some National League games. I think one's already on right now. So I'm going to go, when I'm done here, go watch some baseball and play with the dog and enjoy my evening. So if anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. And I'll see y'all tomorrow. Y'all have a good evening. Bye-bye.